Bryan, how the hell are you?
Doing good, man. Doing good. Having one of my best.
Shave? You look like a baby-faced assassin. I know.
Yes, I did.
Oh, there it is. Did you
And
shave for the podcast?
it was a little bit for the podcast, but it's also I got family coming over this weekend, so I didn't want them to see me as a mountain man.
Did you also get a Brazilian?
I did not. No.
Okay. That tells me about your relationship with your family. So
Trying to keep the budget low.
that's fair. That's fair. Dude, how are things?
Things are going well, man. I haven't one of my best years yet so far, so that's always a good thing. Can't complain. Definitely can't complain. How's everything been on your end?
Dude, it's a freaking roller coaster. But nobody ever paid to go to Disney for the candied nuts. You know what I mean? They go for the roller coasters. So you can only complain so much before you just get on and enjoy the ride.
That's the truth.
Shit, Peter, that might be a whole month's worth of trainings right there. Oh, right. So, Bryan, I'm stoked to have you here.
Thank you.
When it comes to IUL geek, IUL nerd, I can't think of anybody more nerdy than you.
Thank you.
I'll tell. I mean that in the best way possible. You
Person says nerdy, I would say analytical, but same.
Both work.
I'd call you freaking geeking.
You know the difference between a nerd and a dweeb, though? Nerds get paid.
Well, then I guess I'm a dweeb.
Oh,
So much for that best year ever. No, dude, what got you into IUL? Because it wasn't always your passion. It wasn't always. It's become the crux that you're willing to die on, the hill you want to die on in a lot of ways. And I've seen that time and time again. And you and I have spoken 1,000 times. We agree on most things, disagree on a few things, but where, when, how, why? Like, why IUL?
So I guess the backstory is I got licensed back in 2019. I had to end up with a company called Assura. They ended up merging into Symmetry later on. But as I was with Assura, I was doing mortgage protection, and I did have a pretty good mentor. You know, he was one of the kick the chair types. So, you know, get the dial in, and you need to have $400 a day. And, you know, I was just getting kind of burnt out. I was working, 8, 10, 12-hour days for 5, 6, 7 days a week, every single week. Back then, this is before COVID, so everything was face to face. I was living in Southern California, driving, no exaggeration, about 2, 3, 4.
Can I just say that I'm glad you didn't say kneecap to kneecap?
Yeah.
I hate it when people say that. I just think of scabby knees against scabby knees, and it's gross. So,
Also, I'm definitely not going knee to knee. We're going to have at least 4 to 6 foot between us. I need a table to keep maintainability.
well, yeah, your insurance career came up through the COVID era, so 4 to 6 feet.
Yep. So with that being said, I was trained, like majority of the people that are probably watching this podcast, I was trained to do IULs in a way that probably wasn't the best way. So funniest thing was I actually was helping a lady with an IUL. She came across another professional that really knew what he was doing, and he pointed out some of the bad stuff that I was doing. And my ego jumped in. I was like, I'm not doing it wrong. This is how I was trained, and that guy's wrong, and blah, blah, blah. And then instead of fighting it, I just shut up and embraced it. And I started watching the guy's content because he's on YouTube. His name's Steve Precy with IBC Global. But yeah, he ended up just crapping all over my plan, and rightfully so. It was an option A, target funded policy. So definitely was not doing the right thing at the time. But it was just crazy because I started learning from him. And that's when I realized, like, I shifted over because he's a whole life guy. So I shifted off of IUL, and I was like, oh man, this IUL stuff is a scam. Everything they say online is horrible. So I pushed more into whole life and started bashing IUL. And then all of a sudden I came across a few videos. It was Cash Value Life Insurance Reviews, the YouTube channel, came across Doug Andrews, came across David McKnight, listened to a whole bunch of that stuff, and then finally realized that it's not necessarily the product that's the problem, it's the agents. So I took a little bit deeper dive trying to disprove, by the way, whole life guy at the time. So I'm trying to disprove how bad IUL is. And in my conquest to figure out how bad IUL is, that's when I realized that it was the agent and not the product. Jumped into quite a few different master courses trying to figure this stuff out. Learned a lot through the agency portal. So guys, if you're not in there, you need to at least get in the basics $97 a month one. There's so many portals and so much value in there. I mean, I remember texting Carson, hey man, I blitzed through your whole package in 2 weeks. And he's like, no, you didn't. So it was just funny. I kind of am I learn a lot, but my God, such a good portal. If you guys want to learn the basics and stuff about cash value life insurance and stuff like that, definitely he's not paying me for this plug. This comes from the house.
I was going to say, I'll send you a check afterwards. Oh my God.
able to.
It's just a complete package because I knew IUL at the time. So when I was going through the course and stuff, it was all a nice recap and stuff like that. But what really hit me was the marketing strategies. When I was going through the red, green, yellow and prioritizing and going through the 60 different ways to do it, it was just eye-opening to me. And I was just like, holy crap, I'm doing all this wrong. So I greatly appreciate you going through the rev and getting all that stuff built out and getting those portals all nice and neat and stuff like that. But yeah, it's just been a crazy journey from being an IUL wrongdoer to being an IUL hater to now being one of probably the biggest advocates in the industry for IULs.
Bryan, what do you think about So I have some thoughts on a way that the industry could correct agents writing those inappropriately, right? One of my biggest challenges with the whole process is when you write a policy the appropriate way and structure it accurately, where it's going to do the things that it needs to do for your client and be sustainable and get rid of the peaks and valleys, it's minimum face amount, right? We want to get that face amount down, increasing death benefit, depending on what kind of strategy we're going with. But the biggest challenge that I see with that is agents that go in and plug in the numbers. And it's like, okay, I talked to my client and they said they could do $12,000 a year. Great. And they plug in $12,000 a year, even if they do it max funded, $12,000 a year. If they change that death benefit to either level or increasing, right? And we have a maximum funded minimum face amount policy. All of a sudden, instead of that $12,000 a year paying the agent a $10,000 commission check, it pays them a $3,500 commission check.
Yep.
Same amount of premium coming out of the client's pocket, going into the policy with the carrier, right? But it gets treated significantly differently because it's paid off of the face amount, right? And then excess. And I think if the industry as a whole went through and figured out a way to not, right now, they almost decentivize the agents to do what's right for their people.
Somewhat. You got to remember, we are life insurance agents. We're not, licensed professionals. At least I'm not. So as a life insurance agent, it's only right that I get commissioned on the life insurance portion. So when we do minimize that face amount, we are basically saying, hey, I'm going to lower your life insurance. So, when you're doing it right, I think if they were going to incentivize anything, I think what they would do is probably just add a little bit more onto the excess premium. I think that's a way they can do it and still maintain fairness. And some contracts are pretty good on the renewals as well as the excess premiums too. But I mean, in the spirit of things, and I hate to play devil's advocate here, but we are life insurance agents. So if we're minimizing that death benefit, we should be minimizing the commission. And by lowering that commission, if it does work out better for the client, then that's usually going to lead to more referrals. We're going to get more business off of that. It would be nice. Trust me, I would love to get paid 10 grand instead of the 3 grand by doing it right. Definitely 100%. But we also got to understand the spirit of kind of how it all works as well. So I'd be definitely an advocate for seeing them increase maybe perhaps the excess premium. I think that'd be a good in the middle.
Yeah, Peter, I think that's such a good question. And Bryan, I love your take on it. I think I was actually talking with some folks, and I can't say which company, but they do a lot of IUL business, and was chatting with some of their folks the other day. And we were talking about some of this. And one of the things that came up was just remove the option off the table, because at the end of the day, if we're not looking to optimally grow cash value, then we shouldn't be using a cash value policy. Like, why would you want to do something in a less than optimal fashion? Because anything that's less than optimal is less than optimal, right? So if all you wanted was permanent death benefit, use a permanent death benefit policy like a GUL, or even a protection IUL is going to do a better job than a standard IUL, right? At doing that, providing permanent insurance on a guaranteed basis. That's like, why would you do it non-optimally? So be optimal one place or another. And so Bryan, I love your take. Like my take, I just want to take away the way to guarantee people never get screwed is to just take away the agent's ability to make the tweak. It's either always optimal or it's not. But then, Bryan, I like your take. We are life insurance agents. So if you're not going to pay us for that, but we are doing the work, pay us a little more for something else. The group I was even talking to, the carrier we were talking to, one of the ideas that was floated out was, what if we bonused them for an additional term? Like if you can submit that you did a needs analysis, you submitted, you issued a optimal IUL, you did a needs analysis, and you had an additional term, we'll pay you, maybe your normal contract was say 80, 90% on that term. We'll give you a 20% bonus if you can submit the supporting evidence. And I think that's something we haven't seen from carriers, frankly, is their investment in the agent's integrity. Because here's what I know. One of my mentors back in the day taught me this. If you look at where someone is paid, if you look at where they're bonused, that's where you'll find their motivation. If you're bonused, if you make more money to do it wrong, you will continue to find, regardless of how many agents are out here saying, I got in the business to help people, you'll find agents doing it wrong. And even though they've been taught, they will purposefully not, Bryan, they'll ignore you, they'll ignore me, they'll ignore all the teaching and training so that they can claim ignorance, because ignorance is bliss. And bliss, in Peter's example, is an extra $7,000 of commission for the same damn policy, right? If we take away that opportunity to bonus yourself for doing it wrong, you can't turn a blind eye. The bonus is on doing it right, but carriers haven't done that. And so I don't even blame the agent. I blame the carriers.
I do give a little bit of a shout out to a particular carrier that I won't name because I don't know how long that program is going to stay around, but they do have a little bit of a bonus if there is something called a first year threshold hit. So in other words, if the premium is 12,000, as long as the client makes 11,000 or more, then there is about a 15% bonus to the target. So it would be nice to see if other companies followed suit in that. The only downside is I learned the hard way that if the client takes a loan out, unfortunately that 15%, if they take a loan out within the first year, you lose that 15% bonus. So, if you're encouraging clients to take loans, which I'm a big advocate for, then you do lose it. I mean, it does turn into a chargeback, which I'm not happy about. And I'm trying to fight with them over too, because it's like, if the client's taking a loan, you guys are getting your guaranteed 5%. So you guys really are not missing out on that much opportunity cost unless you guys are making way more on the back end, but it is what it is. But I do want to give a shout out.
Another thing that I think would help with that whole just industry mindset shift would be incentivizing agencies for persistency.
Yeah,
like keep that policy on the books. And I mean, there are some renewals and trails. Some carriers are better with that than others. But by and large, once you're outside of 24 months.
Well, even inside of 24 months, right? It's just a chargeback. Like, what if, Brian, hear me out. How many policies would you have chargeback ever? And I know you don't have many, but how many would you ever have if the penalty for a chargeback in the first 2, 3, 4 years was not only a chargeback of commission, but like, what if you had to give up a nut?
Yeah, it'd be a lot less.
Pistachios is good.
Yeah. Yeah. I don't know. There needs to be more skin in the game, I think.
I think a really easy resolution that they could also do is just force a signature on any policy that's not optimized correctly. Just put it in big, huge, bold letters that says, hey, this policy is not optimized for cash growth. Make the client see it.
I like that. I like that. If it's a mech, because now like post AG 49 environment, if it's a mech, the client has to sign a piece of paper saying they know it's a mech. It's a modified endowment contract, which mechs can be great, but the client knows. I like that idea. In fact, I think they should make those big bold letters red.
Exactly.
Like
now the client signs off on it, the client's can at least have the opportunity to ask the agent, hey, why am I signing this? Why you said that this was for retirement and that this was going to build me equity in my policy and all these fancy words and terms you were throwing around, but here it's telling me the opposite. So what's going on here? And it'll at least spark that conversation. Now, is it going to work for everyone? No. How many people just sign just to get the paperwork over with? No. That's why I like your idea. Big, bold red.
Yeah. You know what? To that point, if it wasn't sold for that, then make them acknowledge what it was sold for too. Like so blessing and a curse, I inherited a small book of multi-line clients when I first opened my agency 13 years ago. And a lot of them had traditional UL policies that were in trouble because they were written back in like 1990, right? When interest rates were crazy high. And so I know that most of those policies were probably sold under the pretense of a discount. It's like, hey, we're going to sell you this policy and it's free life insurance, right? The amount you're going to save on your home and auto is going to cover the cost of the policy. And should something happen, you've got this policy that really doesn't cost you anything out of pocket. But a lot of those same clients that when I got a hold of it, started looking at stuff and it's like, oh, this is not doing well. And called and was like, hey, we need to come in for an account review. We'll take a look at all your stuff. And we'd sit down and we go over the home and auto stuff first because it's, low hanging fruit, quick and easy. It's like, okay, so here's the bad news. I looked at your life insurance policy and we need to make some adjustments, right? Here are your options. You can either put a ton more money into this thing, or if you're still healthy, it would probably make sense just to do something different. But this is what it looks like if you put this much in, or if you leave it alone, then this is what happens. And I got yelled at time and time and time again by people that I didn't write those policies. I was just the one that happened to look at it and go, oh, there's a problem. And knowing there's a problem, Brian, do you want to know about that today or 20 years from now when this thing just disappears, right? But what I always feel is interesting with that is when I sit down with those clients, we have those conversations, which they're not fun conversations to have, full disclosure, but they're conversations that need to be had. And so when I sit down and have those conversations and I give them their options, I find it kind of ironic, funny, I guess, that the last one of those that I did, the clients came into the office, we sat down, I laid out their options and this is what's going on. And they sat across the table from me and said, my agent said that this policy would last forever and I would never have to, and they went on this whole thing. I'm like, I'm really sorry to hear that. Can I ask you something? What was your agent's name?
was Tammy, wasn't it?
Crickets. It's like, did you go to their office or did they come to your home? Crickets. And it's like, so was it actually sold that way? Or is maybe the truth a little bit from column A, a little bit from column B, that when they bought it, maybe the agent said, hey, this could be this if you wanted to. Was it misrepresented? Maybe, right? Do some clients have selective memory? Definitely. So it's interesting that there are certain things when it comes to doing policy reviews and looking at stuff that they're, oh yeah, I remember this guy said this, and this, and he was wearing a blue shirt. And it's like, what was the guy's name? I don't remember. So I think to that point of like, hey, if you're going to sell something that's suboptimal, having that disclaimer, that disclosure, and spoiler alert, even if your carriers don't require you to do this, you can still make this a best practice for your agency and your clients, right? So when you write something for them, write it and make them sign something that says, I understand that I'm using this policy for this strategy. And if I keep doing what I'm doing, it's probably going to disappear in about 15 years, right? But I think just from a best practice standpoint, then it alleviates the pressure on you and them, because when they pull out that policy and they look at it, that's the thing that's right in there. It says, hey, we set this up to do this, this, and this. It's not going to do this, this, and this unless we make these adjustments. So I think something like that.
You should always have a CYA. If you don't have a CYA, you're getting yourself in trouble, especially with the influx that we're having of these IUL exposure type people that are, bashing the IUL and talking badly about it. But if you have that signed, you can say, hey, Mr. and Mr. Smith, you remember when you signed right here that you stated that this was built for this exact reason? It's going to make it a little bit easier to not get in trouble when it comes down to that stuff too. So we have a full CYA that we have our clients, sign completely. There's about 12 different disclosures just to make sure. So I 1000% agree to have that CYA done.
So Bryan, in your mind, because when it comes to IUL, I love IUL. I love it. You know that. Some people think I might not because I put a lot of stuff out there on like how not to do IUL or where and why it might suck. But let's be honest, that's marketing. It gets people turned on to me and then they're like, okay, well, what else? Couple of the big questions. Question number one is, what is an IUL for? When do you use an IUL? What's your personal best use case for IUL? And then question number two, what is it not for?
So, man, this is where I'm going to get a lot of hate in the comments, but it's fine. I'm a huge IUL advocate. I think as long as a client has the capability to max fund a policy, I think it could be utilized for everyone. A big asterisk next to it, though, is we do need to see a little bit better cap integrity when it comes to these policies. If we could get that, I'd be a lot more on board with saying, hey, if anybody can max fund a policy, they should have an IUL.
I just like that you can pronounce and ask tasks or risks.
So the first question to answer that is, I think anytime the client has, at least 3 to 6 months worth of savings, if they're maxing out their Roth and they have excess money after that, I think, honestly, I can't think of a bad candidate that can't max fund a policy, personally.
So I really want everybody to just slow down and think of those things. So they do have savings. And what's in the savings?
At least 3 to 6 months, in my opinion.
Okay, cool. And then they also have...
At least having some kind of diversification. And there's nothing wrong with having traditional either, because let's be honest, with standard deduction, your first portion of your income is tax-free in retirement anyways. So that's another thing that's a problem in the industry too, is everybody says, oh, IUL versus traditional. Listen, if the client has 3-4 million in a traditional, yes, I can agree. But let's be honest.
700,000, it's at 4% distribution per year, your 4% distribution rule. That's all tax-free at standard deduction. And if agents don't know what we're talking about, you probably ought to pay Bryan or pay myself or pay Peter to teach you. Just saying, because you're costing your clients the little bit you're making yourself. That's the thing that always bugged me. Like all the way back to Peter's example, you made $7,000 extra bucks. You just cost your client $700,000, or you cost them $70,000 or whatever it is. It's not justified.
And here's the thing, guys, is majority of that stuff I do, because I get a lot of agents that are like, hey, I wrote this policy. Can you audit it? They'll reach out to me and, I'll run an audit through it. And I almost get the same thing every time. Why was I taught this way? You know why you were taught? Because your best interest was the person that gets paid off of you. Don't utilize who gets paid off of you, because they're not looking out for your best interests. You need to go into a third-party source and pay for mentorship where, through the Rev portal. Do you make any overrides off of the Rev? No.
Lose money.
It's third party.
Yeah, we
have no incentivization.
Dude, we have to dump right now. It used to be worse, but right now, $8,000 a month back into Rev, just so Rev doesn't go backwards, even though we have hundreds of people in it.
Yeah. But the point is there's no incentivization for you to teach them the wrong way. So by seeking outsourced third-party information, you now take that the monkey off the shoulder when it comes down to, everybody gets mad when you say pyramid scheme, but let's be honest, the guys at the top make more money than the guys at the bottom. So with that being said,
wait a minute.
Go ahead.
It's not a pyramid. It's just that, like, if I bring you and Peter both in, and you guys both bring 2 people in, and those 2 people bring 2 people, we can all get rich together.
Yeah, there is one guy at the top.
This is an episode of The Office, by the way.
So the whole purpose, though, is just understand that third-party help is going to help you guys. I didn't know what I was doing. I was improperly taught. I wrote 5 bad IULs myself. Now, once I learned what was right, I went back to all 5 of those clients, and I said, hey, I didn't know what I was doing. I apologize. If your goal was life insurance, because I was selling like mortgage protection, you're good to go. Just make sure you make this premium and you keep it going for the rest of your life. You cannot stop. However, if you guys want to max the cash out, this is what you can do. You can go back in and catch up the premiums that you missed out on due to my ignorance, and then properly fund it. It'll be perfectly fine. 2 of those said, hey, it's not a big deal, Brian. We were doing $100 a month. We can afford the $300 a month. No big deal. It's cool. 2 of them were like, hey, man, it serves a purpose. If I die, is my mortgage paid? Yes. Okay, perfect. We're good. But one lady, not so nice. How could you be so dumb and ignorant and not know what you're doing? This is BS. And it led to one of my very few chargebacks. But I felt it was the right thing to do, is go back and help them. But to the point is, majority of this stuff, like when I'm helping other agents, it's always ignorance. There's not as many greedy players as we think, at least from my standpoint. I find most of it is, they were part of a 3-letter organization that, they were promised that this is the way to go. And, they're selling their policies to their brothers, their cousins, their aunts, their uncles. You think they meant to hurt them? Probably not. So majority of it is due to ignorance. And I think a lot of that ignorance could be, squashed with just simply investing into yourself and getting into a third-party program where you can learn from, the people that are doing it right, such as yourself. I think there's very few people I can count on one hand that have teaching platforms that are teaching people to do it the right thing, versus there's thousands of other TikTokers and stuff like that are teaching the wrong thing. So one of my biggest highlights was actually meeting you. And I know I jump in your DMs and tell you all the time how much I appreciate you being in the industry, but man, it's the truth. You've been so awesome using your platform to do things right, and there's just not enough of us doing it. So from the bottom of my heart, I really do thank you, Carson.
Well, joke's on you. I've been fucking people over this whole time. Y'all just don't know how yet. Peter doesn't even know how. It's going to come out at some point. I haven't figured out how yet, but it's going to come out.
I know it's happening. Yeah, I think that's a great point about searching out third-party resources that aren't incentivized to show you how to do stuff is huge, man. That's huge. I just helped a lady yesterday, day before. I was telling Carson about it, but she's a new agent and has a client that is in their mid-60s that has no real retirement per se, and has a couple goals. They want to do something legacy planning for their kids, and they also would like to maybe get some leverage on setting aside some savings for retirement. And they posted something in one of the Rev pages and asked for opinions, and a bunch of people, it's like, hey, do you think an IUL is a good fit for this person? And there was a bunch of people that jumped on right away and was like, nope, not going to do it. They don't have, and they all had valid responses. Like, that person doesn't have enough time horizon to make that make sense. But what almost nobody did was nobody told her what she could do to help this person. And so I reached out. I was like, hey, if you want to jump on the phone for a couple minutes, I just sent her a message. Here's my number. Give me a call. I think that you can help your client, but I don't think there's a magic bullet. I don't think it's one problem, one policy. I think that they've got a couple things they need to do and maybe a couple strategies to look at. And so we jumped on the phone and we started talking through, and I was like, tell me a little bit about your client. Well, she's 65 years old and she's making really good money right now, but doesn't have any significant retirement savings, wants to leave some money for her kids, and also wants to save some money for retirement. Do you think an IUL is a good fit? It's like, on a topical level, probably not. It's like, because she really is going to need, if she can't inject a bunch of money into that thing in a short amount of time, it's probably not the answer for her. It could be a part of the answer for the legacy portion, but I would probably look at, if this was my client, if this was my parents, somebody's like, I would look at solving 2 problems with two different products, right? The first one is legacy. There is no better way to solve for legacy than life insurance. It is the best way to do it. You want to hand money generationally down? That's the way to get it done, So look for a guaranteed death benefit type product, right? Which could be a protection IUL, it could be a GUL, it could be a whole life policy. something that's got a guaranteed death benefit, right? Then I would take whatever additional premium, whatever additional money that they were going to look and do some investing stuff and do some investing stuff. It's like that could be set up an annuity, set up an indexed annuity. If they want to take advantage of the index with the guarantees on the floor, they could do that. They could do a private placement. They could go do AUM. They could go do all sorts of different stuff. But I don't think in their particular case that this is a one size fits all kind of solution. If they were 25 years old and had some other stuff going already, maybe. But for this person, no. And at the end of the call, she was so thankful, not only that I took the 10 minutes to jump on the phone and have a conversation with her, but that she was like, my upline has never explained to me the difference between those different kinds of guaranteed death benefit products. Like she didn't even know that GUL was a thing, or that protection IULs with the guaranteed death benefit were an option, or whole life. And we took a couple minutes and just kind of talked through the different nuances between the different types of contracts and kind of when it makes sense and how to present it. And she was like, my manager basically just said, no, just write them an IUL. Just write the IUL. She didn't tell me how to structure it. She didn't tell me how to do any of the other things and didn't explain why. And I just want to make sure that I do right by my friend, because this lady is a friend of mine that came to me for advice on how to help her. And I want to make sure that I'm doing right by her. But had she not been a part of the Rev community, it could have ended up being a bad deal.
That's the third party source validation. I mean, if her manager, who just happens to get paid off of what she does, is helping to steer her to make the most amount of money for both parties. So that's just a really good story to hear, that, you're curing the ignorance. That's the best part. We can help the ignorant agents. We just can't help the greedy ones. The greedy ones are always going to do what they do, and there's nothing we can do about that. Yeah. But if we could cure even half of the ignorance, I'll guarantee you, I personally have over 700 plus policy audits of existing policies, and about 97% of them are wrong. If we can fix the ignorance, I think we can get that number down below 50%.
Dude, I do want to take a quick moment, because I want people listening to understand this is not a commercial for Rev. Would I love to see you there? Absolutely. However, there's some other quality stuff. There's a lot of bullshit out there, frankly, when it comes to coaching, training. There's a lot of crap that's going to teach you to make a whole lot of money screwing people. But there are also some other quality programs. And Bryan, I know you've participated in some of those. And so I want to take this moment. One of the values that I believe in is that we give value without expectations. If you're going to align with Rev, you're going to align with Rev because we deserve to have you there, and you deserve us. But also, maybe we're not a good fit. Maybe the swears that I say, or I have too much or too little chest hair. I don't friggin' know. But whatever it is, but I know you've also participated in some others. So I think it's so huge, this concept of third-party education, collaboration, and accountability. Like, those three metrics have to be met. Education, collaboration, accountability. And if you refuse to invest in those, I refuse to call you optimally ethical. You're a fucking piece of shit, and you should probably invest into your client's outcome better. But Rev's not the only one. I've been a part of others. My question to you, Bryan, is what else have you done and are you doing? And not necessarily it didn't work, because I don't want this to be crap talk on other programs that didn't work, but what ones are quality and should people be focusing on other than Rev? Because again, I'd love to have them there, and I appreciate all your kind words about it. But what else is out there that people could tune into?
So there's quite a few. That gentleman, Steve Parisi, if you guys want to learn more about whole life, IBC Global, I've learned a lot through his YouTube channel. He has a paid subscription you can go through. My recommendation is look for maybe some companies that that they're ethical. So watch their stuff, vet them. I mean, I know we're not bringing this back to Rev, but I got to tell the truth on how I came into Rev. I thought you were full of crap. Everybody kept telling me, oh, Carson's so good. Carson's so good. So I sat through quite a few of your lives just poking questions at you to see if you can answer them. And you answered every single one. So by that, you basically qualified. I was like, you know what? I'm going to listen to him. I'm going to get into this program and I'm going to tear it apart. I'm a very negative person. So I'm always going to tear something apart. And then by not being able to tear apart, that's where I fall in love. So vet it. I watched IUL Insiders is another one through Doug Andrews. I watched tons of his videos, listens to tons of read through the comments, the negative, the positive, before I ever bit the trigger. So the biggest thing is kind of vet what you're going into and just kind of understand why you're doing it. So, I mean, there's quite a few programs. Tom Hegna's annuity course is pretty nice. I've subscribed to so many different ones, just trying them out just to see what I like and what I don't like.
Dude, what do you think So I came before my story's out there. Before insurance and finance, I was in automotive repair. That's what I did. I was born and raised in it. That's what my daddy did. And we didn't have a whole lot of money. So from the time I was, 8, 10 years old, it was like show up at the shop and start crushing oil filters in the hydraulic press and, whatever else, and sweeping floors. And then, by the time I'm 12 years old, we're changing brakes. And by the time I'm 14, we're doing timing belts and water pumps. And like, that's the world I was in. By the time I was 18, I don't know, I probably had $20,000 worth of tools that I didn't have paid off, but I had loans because, thank you, Snap-on. But they'll give you that loan. But also, like, I have $250,000+ worth of tools for a job at the time, by the way, that like when I left automotive repair, I was making good money. I was making 6 figures. I was working 80+ hours a week. I was doing a whole bunch of shit, but I had $250,000 worth of tools. And every other month I was, at the time I was living in St. George, Utah, right out of Zion National Park. And literally every freaking month I was either in Vegas or San Diego or Denver or Salt Lake City, somewhere for some training that somebody was putting on like E2 compliance and testing and dynamic compression testing and this and that. And it's like, just so I could do my job. And so when I came into insurance, my problem is I didn't know where to spend my money, but I knew I needed to spend some money to have the tools and have the training to be better. I was elite in auto repair. I won't say I'm elite now. I've gotten to the point where an RC car will kick my ass. By the way, Peter, that one fail. I mean, I've been doing this I've been doing insurance and finance for a decade now, and there's a lot that I've just either, kind of forgotten or lost the patience on, frankly. But the concept of investing in myself was not foreign to me. I had to buy the tools. The shop you work for won't give you there might be some shop tools, like specialty tools, but my wrenches, I couldn't borrow them from another tech. He needed those wrenches to feed his freaking family. So I had to buy my own wrenches, right? And I think in our industry, one thing, especially since I launched Rev, one thing that has just struck me to the core, and I'm probably too crass and I'm very mean, is that it just blows me away that agents don't realize they have to invest in themselves. You have to buy your damn tools. You can't borrow them off another tech. There are some house tools, the specialty stuff, what this kit and that kit. There's a couple things that the whole shop can use, but that's not what you need. Like, you're going to use those once a week, once a month. What are you going to use every moment of every day that's going to drive the needle forward for your clients and for you and your family? That's the shit you have to pay for yourself. You don't get to call yourself a mother freaking entrepreneur if you're not willing to do that. You're just a reseller. You're a wholesaler that doesn't get any benefits because you're not on a W-2. You're a sucker for getting talked into a 1099 and reselling some shit. You might as well go sell Aeropostale jeans or something. My God, Hollister. Because that's all you're doing unless you invest in yourself. And it's been the frustration of my life trying to get people to invest in themselves. Again, y'all don't need to buy Rev, but Bryan, I want your input here, and I apologize for talking so much. At what point did you realize, not just, I need third party, but at what point did you realize I'm going to have to spend money on it? I'm okay spending money on it, and here's why. And then what advice would you give to somebody else who's sitting out there that's like, I can't afford $10 a month. I can't afford $100 a month. I can't afford $500 a month for some of this stuff.
So we'll be a little vulnerable here and share kind of how I got into it. So after I learned that I did it wrong, I didn't have 2 pennies to rub together myself. I had no money. So right when I watched Doug Andrews' video for IUL Insiders, I was like, holy crap, I need to get into that. How am I going to get into it? I started freaking asking everybody in my family, hey, can you loan me $400? This guy's offering a program where it's 1 month, no contract. I'm just going to go in there and learn everything I can in 1 month and be done with it. So I was begging people. I ended up going to my wife and I was like, hun, I really need $400. We have separate accounts. So I'm broke. She works a job. She's got all her money. I said, hun, I really need to borrow this money. She's like, for what? And I was like, I need to learn this stuff. She's like, what is that going to do for you? And I just bothered her enough to where she finally just gave it to me. I like to think she invested in me, but the truth is she was just tired of it.
Just me trying to shut you up.
But yeah. Shut up and get out of here. But
is that cool runnings? I'll give you $1 to shut you up.
Yeah. So she ended up giving me the $400. I got into the course and I did blitz it. I went through it in about 3 weeks, learned everything I could. But then after that, I understood the value. And it was that point that I woke up and I said, holy crap, man, I've been doing this all wrong the whole time. Go to people that know what they're doing versus trying to invent the wheel. It's so much easier if you can find somebody that's done it at a high level that can teach you at a high level. You will cut your time in a fraction. It was to the point where I was watching YouTube videos, hour, 2 hours, all to pull 10 minutes worth of nuggets. When you get into a paid platform, all the information is there. There's no gatekeeping. It's awesome. You can just learn so quick. I kept that subscription for 3 years. 3 years, because I saw the value in what was going on and stuff like that. So, man, that third party coaching is just that's what changed it though. And it all happened because I did one wrong. And it took another agent, Steve Parisi, to point out what I did wrong for me to see it. So if you guys are even questionable on whether you're doing it wrong, go get a third party, whether it's Rev, IUL Insiders, Steve Parisi's course, whatever you guys feel comfortable with going through, vet it out, figure out what you guys like and go in there. It's awesome. I would not change anything.
I had a real similar experience with Rev. It was like 8 years in the business at that point, 9 years in the business. And
You were the worst agent.
worst agent ever. Worst, terrible, no good, very bad agent.
Oh man.
No, I fell into some traps and some pitfalls, and specifically having people works when you work too. I hired my first employee a couple of years before that, and she was great. The problem was I used it as expensive time off, right? It was like, oh, Beth's doing this, this, and this. And what I should have done was leverage that newfound time to have more appointments to do the life and financial services stuff, because she was minding the ship on the P&C stuff. But I ended up just watching my income dwindle and dwindle and dwindle. And it got down to December, it was like December 1st. And my American National contract, I only had to write like $3,500 in annualized life premium to keep my contract. And at that point, I had not hit the requirements to keep my contract in December, right? So I'm an MDRT qualifier. I know how to sell life insurance. I could do it. I just wasn't, And so I did what I needed to do to keep my contract. I took out a life policy. I think I took one out on my site. I might have done a term conversion on me or my wife or somebody, and found a couple policies to make sure that I got over the hump and was comfortable. But that January, it's like, okay, well, I like being on lists. I don't like being on that kind of list. And I don't know what I'm going to do different, but I'm doing something different starting right now. I just don't know what it is yet. And I happened to get a random email with Cameron's name on it talking about Rev. And it was, at the time, it was Rush, right? It was the pro, the middle group. And it had this $100,000 guarantee. And it's like, hey, if you come in and you do the work we guarantee, you'll increase your income by at least $100,000. And if not, we'll give you your money back. And so I took that thing and it was like, all right, I recognized Cameron's last name because Cameron's dad was an MLGA at American National before he passed away. And it's like, okay, I've heard of the Ivies. So I took it and just started flipping it out to anybody that I knew, liked, and trusted, and said, hey, what do you think about this? I'm thinking about doing this thing. What do you think about this? And I did not have the money to pay for it at the time. So I put the whole thing on a credit card. And that totally changed my trajectory, because it got me re-engaged and reinvigorated and introduced me to some of my best friends on the planet. But the same kind of thing. It was like, all right, I have to gamble on me, and I know I can do it. I just need some direction. I need some help. So yeah, much like you, man, stumbling, like Rev found me, and it was the best thing that ever happened in my career.
It's when you need to get stuff going, it's crackheads are the best example, man. When a crackhead needs their fix, they figure out how to get it. And that's kind of what I did. And I was like, yeah.
No crackhead ever wakes up and says, you know what, I don't think I'm going to smoke crack today. They figure it out and figure how to do it. Yeah. Yeah.
So Bryan, what's next for you, dude? We've talked about where you're at, where you've been. Where are you trying to get to?
So this year I've been having one of my best years. I'm sitting right around pretty close to $500,000 in personal production. So I would like to finish the year and write 7 figures under my own pen. Once that's done, I think I am going to scale back and start, focusing more on the agency and teaching other people how to do it. But it would mean a lot to me if I can get that 7 figures on my own pen.
Dude, I think it's a huge thing. I remember the first year I did 7 figures, and I haven't the last few years. I've been so engrossed in all this other stuff that I've kind of lost track of it, kind of lost vision, and the imposter syndrome is setting in like crazy. And I'm like, okay, I got to get back to that, right? But I will say that was a turning point in my life. My career was hitting that, and I was like, oh, not only did I hit 7 figures, but that's $1 million of target premium, which, by the way, $1 million in target is equal to like 4 to 5 million in annual premium, like if we're doing it right. So it's not that I talked people into giving me $4 million this year to put into life insurance. I solved that many problems verifiably. And to this day, 100% of those policies are in force. To this day, like I still do all my annual reviews. To this day, 100% of those clients are stoked and happy. 0% of them are underwhelmed by the plan we put forth because we didn't tell them it was gonna, we're not gonna take 200,000 and turn it into 20 million. That's not what we're doing. We're doing this other thing. And this other thing, like as long as you follow through, it's a contract, an if-then statement. If you do this, then this is your result. Or if you do this, then this is likely your result. And the expectation was set accordingly from the beginning. But $1 million is what I did. That's what I made. 5 million is the money it took to make that. And it was like, damn, do you know how many people in the entire industry ever get to say that in their whole career?
Very, 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 very.
Not a whole lot.
It's less. Yeah. I was talking to a good friend of mine by the small, simple name of Van Miller. Anyone in the industry who's doing anything better know who Van Miller is. If you don't, then you're not in the industry. Get in the industry. Know who Van Miller is. That's my point. But I was talking to Van. This was probably a couple years ago. And one of the statistics he threw out that I didn't realize is that just, and top of table, MDRT, $1 million round table, that's like 600,000 in income off of life and annuity combined product, let alone like $1 million plus on life insurance only. And then maybe some annuity underneath it too. And right. So, I mean, we're talking 600,000. So underneath that threshold, like 3,000 people in the world, 8 billion people on the planet, 3,000 in the world on an annual basis, 3,000 to 4,000 per year are hitting top of table. So for anyone who's hit top of table, kudos to you. That's such an elite club. It's a club that I've lived in and I haven't been back there. And you know what? The imposter syndrome, it's killing me. It's eating me alive. But I think that's a freaking awesome goal for you, dude, too. That 7-figure benchmark, it's what gave me the courage, Bryan, to do what I'm doing now. Because at 700,000 a year, I didn't have the courage. I just kept showing up to the office and selling insurance. And I still need to do that and I still want to do that. But I didn't have the courage to take it to other agents and say, hey, I think I've got something to share with you. Let me share it. It was when I hit 7 figures that was like, okay, I've got the courage now. Let me share this. And so I don't know. I just think that's one of the most noble goals you could possibly have. So,
yep. I really, 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 really want it. So I'm going to do whatever I can to get that done. I'm on pace for it. So I just got to keep maintain the pace and I should be able to hit it.
Your wife wants you to hit it too, by the way.
yeah, I know.
You owe her $400.
She'll ask her $400. But I'll tell you what, though, a lot of the teachings, guys, it helped me to do one of the things that I love the most. And my wife has been a hard worker for 22 years. She's worked her tail off, 40-hour work weeks every single week. She believed in me. She took care of me. So for the last 2 years, because of the investments I made into myself, I have become a better producer to where I was to the point where now I can be a sole income provider. My wife hasn't worked in 2 years. And that, if you ask me what is the biggest accomplishment I have right now, it's making sure she doesn't have to work. So if it wasn't for the teachings and stuff like that, wouldn't be nowhere near as happy as I am in life. And every time I see her, doing the dishes or playing with the kids or doing this stuff that she gets to do because she doesn't have to come home from a hard work day and, just take care of the family, it just makes me feel so good inside. It makes me realize why I wake up every day and do what I do.
That's badass.
But none of it would have happened if I didn't invest into myself. Plain and simple. No way I'd be making these sales that I'm making. I used to get excited to make that $50 a month term insurance sale. And then I would get excited with, man, you hit those big $150 a month term insurance sales. You're like, oh yeah, man, this is gonna be a huge check. I'm getting $1,800. There is nothing like getting those $60,000 checks, $80,000 checks, $100,000 checks, because you set yourself apart from the competition by learning how to do it at a higher level. So take it for what it is. Invest in yourself, guys. Can't go wrong.
Dude, that's badass. We're wrapping up here. I know you got a hard stop, and I think Peter and I both do as well. If people wanted to get in touch with you, other than going to hell, where would they go?
I'm usually pretty active in the red community. I also have my own community. It's called Cash Value Life Insurance, done the smart way. There's a big old 7702 banner. You can't miss it. I do free trainings once a month. So if you guys want to pop in there and learn a little bit more about IULs, I'm always doing the free trainings once a month. Other than that, it's probably the only way right now. I do have a YouTube channel, but I haven't been put forth the effort on that. So I need to get back and get that going as well.
Would you be opposed if they just showed up at your front door on a Tuesday midnight, late night call?
Well, this is where I would like to say that I would not answer the door, but knowing who I am, I'm going to answer the door and say, how can I help you? Because I'm a sucker for helping people.
Dude, if any of y'all can't get in touch with Bryan, get with me, get with Peter. We'll get you in touch with Bryan. This dude is awesome. He is awesome. So cool. Wrapping up here. Bryan, anything else? Peter, anything else?
I do want to touch one more thing, just in case anybody's listened to this. from the carrier standpoint, what Peter was talking about as far as compensation, it would be awesome to have some kind of incentive for people showing up to annual reviews. I think annual reviews are one of the biggest things that cause these IULs to take a wrong turn. We talk about increasing to level, but if the agent's not there to coach the client to put it back to level, then guess what? The policy implodes. So if there's a way we can incentivize people showing up to annual reviews, whether it's through a bigger trail or a bigger renewal or some kind of check-in status or something, it'd be really awesome to see some incentivization to get people to start doing annual reviews.
You know, I'll say this off the top because I know for a fact we have some C-suites at the carrier level that tune into our content. I'd take 10, 15, 20% off the top on front end commission. Take me from 25 bips or a 1/4%, give me 3/4%. I'll make that same money back over the next 10, 20, 30 years. I'm not worried about that. So the money in my pocket's the same. You're just incentivizing different things, you know, just throwing that out there.
Yeah, it'd be awesome just to see a little bit more incentivization for that to happen. Well, having me on, Carson.
Yeah, man. Appreciate you being here, Peter. As always, appreciate you. We'll get this rocking and rolling. We'll get it published. And Bryan, when we get it out there, I'm sure you'll get tagged 1,000 times. So
Thanks, bud. Have a good one, guys.
yeah.
Awesome. See you, dude.